The stocks discussed on Phil's Gang are not in any way a recommendation or solicitation to buy, sell, or hold. If considering acting on information presented, we first recommend you seek out a competent, licensed professional for advice. Get ready for the radio show that tells you what Wall Street doesn't want you to know.
Oh, I'm a money magnet. Money's coming to me. Money sets me free. I'm a money magnet. Money's coming to me.
It's your daily dose of how to manage your money. And now it's time for Phil's Gang on the Off the Wall Street Radio Network. With your host, Phil Grande.
No one's ever accused the president of not being able to give a good speech, especially when it's written like that. The question is, what does it all mean to you and I and to all the American people? And here's the fundamental facts. We're now 3 years into his presidency. There's still no plan to save Social Security. There's still no plan to save Medicare. There's still no serious plan to reduce the national debt. And none of these things have been addressed. And there's no plans to incentivize job creators.
And that's my senator from Florida, Marco Rubio. And my guest today is Congressman Ron Paul. And we're going to ask him about the speech, and we're going to ask him about housing. And Congressman Paul, welcome.
Thank you. Good to be with you.
Well, we're happy to have you on here. As you know, we really support you. We wish you the greatest of luck. We need you to be our president. So we're behind you. You know, I know we only have a few minutes. I know you're busy, so I'm going to get right to it. I live here in Florida. I broadcast from Florida. I have a national show. My largest audience are in California and Florida, both hard hit. They're the hardest hit areas for housing. Now, Obama promised with $75 billion in stimulus money to help refinance 9 million homeowners. It was a total failure. HARP, HAMP. I don't have to go through them. You know them. Hope for homeowners. All failed. Instead of refinancing 9 million, it was a pathetic 500,000. What is your plan to deal with this if you become our president?
Well, it's a tragedy of what we have, and the best plan would have been to prevent it and not create the housing bubble. So it's such a mess. So anything you do is going to have a little bit of pain for somebody. But what we've done so far for the housing crisis made everything worse, because the people who did benefit, the mortgage people and the builders and the speculators in derivatives, they did quite well when the housing bubble was being blown up. And then when it burst, of course, we bailed them out. And who's suffering now? The middle class people who lost their jobs, and now you've lost their houses. It's awful tempting to say, well, what we should do is, give a lot of money to the people holding these mortgages, and yet they too often, were tempted to see this easy money and perpetual price increases, and they were trapped into this, and that can't be the solution. Really, from a free market viewpoint, the solution is the people who were really in the midst of a pending bankruptcy, they should have been allowed to go bankrupt. They should have never been bailed out by the people and through the inflation of the dollar. And then the prices would have gone down quite quickly. Within a year, they probably would have bottomed out. And people who did save money and were somewhat frugal, maybe they could have gotten some really good deals. But instead, they're just prolonging the agony. They prop things up. They're trying to stimulate housing. And the Fed owns the mortgage debt, and they don't liquidate the debt. They just transfer the pain and the suffering from one group to another. So the main thing is get out of the way. As long as those mortgages are out there, and they think the government might come in and rescue them, the banks have no desire to help out the consumer. If an individual's like this and somebody knew they lost their job and they could pay about 3/4 of it, the mortgage holder and the mortgagee might come up with an agreement. But when the governments get in there, this promise that the government will always be there prevents some of the things that could be more creative and work our way out of this. So I would say what we still need is a lot less government involved in the mortgage markets.
Now, should we get to a RTC like we did in the late 80s, early 90s, so that we can take these homes out of the weak hands and put it in the strong hands? And also, by keeping these folks in these houses for 2 years, 3 years through this process, we saw, of course, the numbers in retail over Christmas. Everybody was so excited about the numbers, but we come to find out it was the money that people were not paying. They're living in homes for 2-3 years and not making their payments, not making their real estate payments. They're using that that money to go and shop, and they're telling us how the economy is growing. What about an RTC? Would you consider something like that if you became president?
I think it should be considered, and it did work to some degree. I think there was a pretty big appropriation. If back then it was only like $500 billion or something like that, then now we need trillions of dollars, and the Fed is involved, in buying this debt, and they hold all this debt. Now, I've said, even though what you're suggesting probably would be less than perfect, I've always said that we should try to work our way out of. There are some programs here at home. Let's say a housing program. If I could save the money, let's say we need to give somebody a boost and maybe a year reprieve, I would insist, though, you save the money someplace else. I mean, if you need $5 billion, cut something that is $10 billion overseas, put half of it to the debt, and then sort of, say, yeah, this is less than perfect, but if somebody needs the medical care or housing assistance or something else, I'm willing to do that, because it'd be one thing would be stopping the waste overseas, a little bit of help would be here at home, and the deficit would be cut. It's not the ideal, but I'm willing to do that, and some people criticize me for even going that far, but I think there are some programs that we have gotten people so dependent on, whether it's these housing programs or whether it's medical care, to start cutting there or keep printing money until everything goes bad. That's what I think is so bad, and that's what it looks like is going to happen. Nobody's going to cut anything, and they will come along, and they'll probably, even the Fed chairman was talking today about, giving more assistance to the mortgage holders, but it's either going to be borrowed money or printed money, and it doesn't solve the problem. You have to cut back on the spending, and that's why I argue we ought to cut back on all this spending overseas. It would be a lot easier, and try to tide some of these people over if we can.
Now, Bernanke today was indicating that he wants to now continue. First, he set up these low interest rate mortgages to the beginning of 2014. Now he says today he wants to expand it all the way to the end, and he's talking. They asked him a question, would you consider quantitative easing? He said, well, I sure would if the labor gets worse. Well, explain. I mean, these low interest rates, it hurts us. These low interest rates continue to hurt us. Well,
it does. It hurts you. Let's say you're frightened with the market and you're trying to go it on your own and save, and you put money in the bank and you get 1% or nothing, but the banks don't have to pay anything for their money. Then they buy government debt, and their balance sheets improve. But Bernanke's announcement today couldn't be too reassuring. If you're old-fashioned enough to think that the true value of the dollar long-term is based on its relationship to gold, the dollar went down rather sharply today with gold jumping up over $40 an ounce. So I think that tells the people what's happening. It's just further debasement of the currency, which we've been doing systematically for many, many decades. And that's the problem. So just more spending and more inflation, more debasement of the currency, and more debt, it can hardly be the solution. And yet I don't see much signs right now in Washington that there'll be anything cut in spending. When they talk about cutting and slashing the budget here and there, they're only talking about little cuts on the proposed increases over the next decade.
Congressman Paul, I wish President Obama could govern as well as he gave speeches, and they should have played. I said they should have played Sound of Music in the background last night as he spoke, because it was anything but grave, and his address certainly didn't reflect his record, which in my opinion is but ugly. And after I listened to what he said, I wondered if the president, when giving these State of the Union addresses, do they believe in anything they say? And what was your opinion on this last night?
I think that's a healthy thing going on. I mean, the slick speeches have been slick for a long time, and the people buy into them. And, even you concede he gives a good speech. I concede that. And so there's going to be a lot of other people say, well, that's reassuring when you think about, what the Republicans are doing and saying and arguing. And the people have come to a pretty good conclusion that this is a struggle over power, and really changing ideas and changing government really isn't in the cards, because Republicans have had a chance to cut back on spending, and they didn't do much of that. And nobody really wants monetary reform. They want the magician, the Federal Reserve Board chairman, to just pull us out of all kinds of problems. Today he was talking about all these projections, what it's going to be like in 2 and 3 and 4 years. And yet the evidence just further revealed this past week that he had no idea that there was a housing bubble. Yet there were a lot of good economists that knew exactly that's what was occurring. So why should we all of a sudden believe them now? So giving a slick speech isn't going to be the problem, and no matter what the statistics they put out, in reality, the people are hurting, and they don't have the jobs, and even those who are working, they're underemployed, and there's a lot more price inflation than they were willing to admit.
And we also know, I mean, the average person on the street, I know here in Florida where I live, we know the gas is up 84%, health care costs up 12%, the deficit 43%. So whatever he said last night, we know it has roses on it. But let's talk about this 15% that everybody's talking about with the tax. And here's what I don't understand, what he has a problem with. I work hard, and if I get taxed 35%. That tax, after that money's taxed, I want to take and invest it. I want to have an incentive to invest it. That 15% for me to invest it into my own company or into another company to create jobs. And what really gets me is this. Let me just play this little clip here. This is amazing, and I don't understand his problem with this 15%.
You would favor an increase in the capital gains tax. As a matter of fact, you said on CNBC, and I quote, "I certainly would not go above what existed under Bill Clinton, which was 28%. It's now 15%. That's almost a doubling if you went to 28%. But actually, Bill Clinton in 1997 signed legislation that dropped the capital gains tax to 20%. Right. And George Bush has taken it down to 15%. Right. And in each instance, when the rate dropped, revenues from the tax increased. The government took in more money. And in the 1980s, when the tax was increased to 28%, the revenues went down. So why raise it at all, especially given the fact that 100 million people in this country own stock and would be affected?
And his answer was, well, fairness. Wait a minute. Fairness. And he said that again last night. He was talking again last night. He's talking about fairness. So he's more concerned about fairness than growth.
Why don't we be fair by giving everybody a 15%? That's a good way to be fair. But they think fairness is sticking it to somebody that has more cash in the bank and raise his rate. So,
yeah.
But all this tax, debate is very, very important, and I'm very much involved in it. And I want to argue for the lowest tax.
Right.
But really, the tax you have to worry about is the spending. As soon as they spend money, that is a tax, and they're going to get it out of our hide one way or the other.
Well, Congressman, we really appreciate coming on the air here and talking with us today, and we really wish you the best of luck. And just know we're here to support you, and we'll do anything we can to help you because we need you as our president.
Thank you very much.
You're more than welcome. That's it.
You're listening to Phil's Gang on the Off the Wall Street Radio Network. We'll have more in just minutes.